Welcome to the Swing Trading with Cycles channel. It's January 16th, 2023. We're going to do our update on natural gas today. It is Martin Luther King Day, so the broader indices are closed today, or like the stock market, I should say. But futures are trading. Natural gas is trading. So you can't necessarily trade something like oil today, for instance. But natural gas itself is trading. And so, as I've said before, if you're not following on Twitter, take a look, pin comment. It'll have a lot of good background for you, and also how to follow me on Twitter. I posted about this that we opened as an inside day, and we'll talk about that in more detail here. We'll zoom into the lower time frames, and we'll also talk about some milestones that we're making on the weekly and monthly chart, just to kind of orient ourselves there. But it does look like, again, just to reiterate, this is a basing, like we've obviously like slowed down the downtrend massively, right? Because if you look from, let's look at from this candle to, let's say, that candle, right? We went from $6 to $4, 32% down in like 10 candles. And since then, from that point to here, it's been about 10 candles as well. And we've gone down about 20%, right? And note that like the difference between being down 30% and being down 20% is actually pretty material. And again, you're talking about this being a similar kind of time period. I mean, you can also just see with your own eyeballs, this is very vertical. And that said, we are still in a downtrend. We're trying to stop that downtrend here because, again, we're an inside day, but remains to be seen if that's going to be possible. But at the same time, we're pretty late in the daily cycle, right? We have Friday was day 26, and so assuming Friday wasn't the low, this would be day 27, right? That's what these numbers are. And I had a question where the numbers come from. It's not an indicator. These are manually added to the chart. Definitely take a look at that pinned comment. Goes through a write-up about cycles analysis, right? Like, and it shows you some charts in detail. This is a methodology to sort of categorize price action. And so if we're this late in the cycle, we would expect we're going to get a bounce at some point. And again, when I say a bounce, I mean something like that, right? Where like that was our last daily cycle bounce. Now this was a feeble bounce. It was only it only lasted 5 days. And let's just get a sense. What was the percent? So that was a 35% rally though. That's not bad. This was another daily cycle advance that was more powerful. That was a 60% rally. So that's what I'm talking about. This was a very feeble one. What is that? That is just 19%. And so if this is the bottom, let's say we get a rally that's like 50, let's say that this was the bottom, then we might expect to get up to somewhere like here, maybe even like there, right? Assuming, again, so this is assuming that it's a bearish cycle, that is, and we won't know that until we see the character of the bounce itself. But at some point, we're going to get at least a little uptrend for a few days, you would expect. We're this late, so not the place that you'd be pressing shorts personally. And if so, we're an inside day. You can see those numbers really clearly, and we're also an inside week. And we obviously are in an even larger range for the week. So the week's range is a high of $7.10 or 7.105. And the low is 6.219, right? So, wait, that's not right. Yeah, that needs to be refreshed. Because we definitely are, that's definitely not the right range. There we go, right. So it's a high of $4.128 and a low of 3.384. So that was that bottom tick, 3.384. And so we need to first get out of the inside day and then have a chance to potentially get out of an inside week. And again, if we're thinking about a daily cycle advance, you would expect it's at least going to make a new weekly high. So we'd at least get back to like, 4, just a little above 4. And let's just see again, like, what is that percentage increase just from there to getting up to here? Yeah, so that would get you to about 20%. So that gives you a potential upside target. That's assuming it's going to be a bearish cycle. Maybe it won't be. We'll have to see. The other thing that's kind of note here is the yellow line on all charts is always all my charts is always a 200 period moving average. This is a weekly chart. So notice we closed below the 200 week moving average for the first time that first week of January. And then we got follow through where we closed below it again, and this time meaningfully below it. and this rally is happening right below it. So you'll want to watch that. As you'll know from if you've been watching for a while, I don't think there's anything magical about moving averages necessarily, but it's more the concept in the sense. So I don't like the idea of like a moving average giving support or providing resistance or whatever. I think that's a little bit of the wrong way to look at it. The point is that this is a 200-week moving average, so it's a really long time span. And so if price is in a really major downtrend, it's going to cross below that. It has to cross below that moving average because by definition, because the moving average is the average of the price over the last 200 weeks, right? And if price is moving down aggressively week after week after week, it's going to fall below what the average price was over the last 200 weeks. And it probably will stay there meaningfully as long as the downtrend kind of persists. And so it's kind of a mile marker, if nothing else. And then this blue line is your 10-week moving average. Again, blue line is always the 10-period moving average. Notice how far below that we are right now. Now, it's actually moving lower every day, right? Because the price has moved down so aggressively, right? But right now, it's at right around $5.26. So way up there. So that's going to be really interesting. And again, as every day goes by, it does get lower. But if we're going to get a weekly cycle low here, that's the other thing to kind of consider. We will cross above the 10-week moving average. And so that can also give you a sense of some of the potential upside. Again, first we need a daily cycle low as a starting point. And then you see, is that developing into a weekly cycle low, which could be the case because of the timing on this, which we talked about in previous videos. And so the other thing I'll call out is that this 10-period moving average is probably going to sort of do what they call a death cross. I don't have the 50. I can add the 50 here. Yeah, so it already crossed over. So the teal line is the 50-period moving average. So the 50-week moving average, we sliced through that, wow, a long time ago, actually. And the 10-week moving average moved below that. And that's just, again, a feature of price action. You're going to have the fast moving average move below the longer term when it makes sense. The average price over the last 10 days is going to be lower than the average price over the last 50 and eventually probably over the last 200. So these are going to cross. So I'll take that 50 off. And so the other thing that we'll look at I don't do this in the videos as often because I don't want to confuse folks. It's a little more advanced. But if you look at a 2-week chart, so this is one of the things I like about TradingView, that it allows you to customize the time periods. So each candle here is 2 weeks, and this candle that just opened, today, is actually a new 2-week candle, which is to say this candle doesn't close until next Friday. So it's 2 weeks of price action. So this was the previous 2 weeks, big red candle, and this was the previous 2 weeks before that. And so you can see you have another hurdle to climb, which is the high of this candle here, which is 4.394. And there's nothing like, these aren't like secret levels or anything like that. None of that stuff. Just think of it as price action is happening on all time frames, always at the same time. And so it's helpful to get different perspectives. And so you can see these are two massive, I mean, you can almost think of these as like half months, right? Because it's a 2-week period. These are two massive bars, right? Red bars. And you could see a world where we're going to get something, it gives you a sense of like, we could get a candle like this eventually. And that could still so basically between now and next 2 weeks, we could rally. That could be our daily cycle low. And then that could be followed up with a candle like that, right? And then a candle like that. So it lets you kind of see in your mind's eye what might be possible. And again, this is just an example of one of those time periods. I think it's kind of a helpful visual. I mean, man, this shows you that this could be building a little lower high. And this would be a very what do you call it? This would be a very optimistic lower high, maybe even something more like that, right? A candle up, and then you'd make a lower low below this candle. That would be your sell signal. You're out, and that might be our path to that 240 level, that area that we kind of talked about on the longer term charts. And obviously, this move could just continue to go up. We'll have to see. The point is, we'll be able to see in real time as this candle kind of fills out. It's obviously started as it's a green candle so far, but we'll see. A lot of price action to come. It could continue to have gains, and then maybe we see an upper wick. It goes from green to red. That's also important to note. The open for this candle is 3.557. Always important to know where the opening price is for a given candle, because that tells you where it goes from green to red or red to green. And so that's just a little bit of an advanced way of kind of thinking about things. We'll go back to the weekly. And finally, let's look at the monthly really quickly. So as we talked about, this is month 31. And what we're setting up for here is that we're going to have an inside month next month in February. Unless we obviously break to new lows or somehow make a new high above 4.445. Most likely we're setting up that February we're going to see like maybe, and it's going to open an inside month is what I'm saying. Doesn't mean it's going to stay an inside month. We could break to the upside or downside. But again, we'll see that coming. And also note, I think I mentioned this in the previous video, we haven't closed below the 50-month moving average yet. We did that. We closed below the 200-week moving average a couple weeks in a row. You would expect that we're going to do that this month, right? So January will close below, again, this teal line here. You can see in all the major long-term declines, we've done that. You know, we spent actually an appreciable amount of time below that. And if I go back to the weekly chart really quickly, you can see the same is true for the 200-week moving average, where we've sliced below that on these other kind of major, like this is a major decline, right? You can see we sliced right through that. This is a major decline. You can see we do regularly kind of slice right through that 200-week moving average. So we're just getting there now. So we may have some time below there as well. You want to kind of brace yourself. And again, as I keep saying, if we're going to make a move to this like 240 area, it would make sense that we're going to get a little bit of a lower high before the big drop lower. And so that's natural gas, just kind of the bigger picture a bit. Let's look at the intraday chart. Again, we are trading right now live. It is Monday, January 16th. And I've been talking about how the 8-hour chart is really showing us a lot of what's happening. So let's look at that 8-hour chart. So important to note, right now we do have a swing low on the 8-hour chart. Now notice this. I'm going to call out the swing. I'm going to kind of mark the swing lows. Swing low, swing low, swing low. Notice they're each lower than the last, but only marginally so. So again, and you can kind of see this box here. Again, these are 8-hour candles. We've really just been oscillating inside this range, not doing a whole lot. And today we're not doing a whole lot either. Again, there is a swing low in place though, so that's a good starting point. And so that swing low is above the high of this candle here, right? I'll mark that. I'll make that red so you can actually see it. And that candle right here, the high there is 3.630. So we've got to stay above 3.630 to have that 8-hour swing high. And theoretically, we obviously need to get out of this box. And if you look at the hourly chart, actually, let's just zoom down there. You can kind of see this is that swing low. So that's the swing low from Friday, right? We made that new low and then it just kind of bounced instantly. And we actually have a little bit of a gap here on the 1-hour chart. That's, I'll note. But it's not. It's just an inside day on the inside bar on the daily chart. That's important to kind of note. So again, you can kind of see this is just your hourly visual. We need to get back above this big red candle, like the high of this big red candle, which would kind of get us closer to getting out of this range. So not a whole lot happening. It's obviously trying to move to the upside. This is a little uptrend right now, but I mean, still within this kind of wider range for the most part. And I'll just say something like a boil is going to gap up tomorrow, most likely, because it doesn't trade today. So you can see the range from the weekly candle is between 1438 and 1074. And if we think about what this is on the daily, you could see a world where we gap up above the high from Friday, so above 1133, and we're down here at 1074. But again, until we break out of this kind of like morass, this is not an exciting trade by any means. So that's the update on natural gas. We'll leave it at that, and we'll certainly give an update tomorrow as we get more price action for the week. Thank you for watching.